So I had a number of trades this week that were very familiar to me, and they should be very familiar to you as well because I've covered them on other videos. And I thought it would be interesting this week to actually put some context behind that and show you how what I do is linked to videos that I put on YouTube, because when the videos go up on YouTube, they're simply an explanation of things that I'm looking for and things that I'm doing within the market. But you must always remember that being able to trade doesn't make you a trader. It doesn't necessarily make you a professional trader. The gap between somebody who can trade and somebody who does it for a living is quite big. And that is because there's a certain level of commitment, experience, practice, the psychology side of things. There's many different facets that bring together all of those things to make you a professional trader. So some of the trades that I do seem relatively simple, but of course it's all about the execution. It's actually going into the market and doing these trades that is the most important. Anybody can look an expert if you cherry pick a few things, but what I wanted to show you in this video was a trade that I've covered in previous videos and showing you what that looks like within the market and something from last week. Now the interesting thing is there were loads of opportunities last week that you would recognize through videos that I've done. But there are so many of them that no way I could get them into one video, so I've just picked on one particular trade that we can have a look at. Now this particular trade was based upon a chart setup. It's never quite as simple as that. I mean, you have to be realistic here. It would be great if we could find something that's endlessly repeated. So you tend to have to qualify trade setups, but you're looking for certain things, you find them, and then you see how the market reacts, the way it behaves, and whether that justifies what you're about to do. So this setup was actually so familiar to me and so obvious to me that I actually tweeted about it as well. I gave you advance warning of what was likely to happen within this particular market. But basically, when we look at this trade, fundamentally speaking, we arrived at the market, we had a look at the charts, and then we saw a chart pattern that we liked. So let's have a look at that chart pattern. Now what you can see on this chart is that there's a sudden amount of backing. Well, I say sudden, there's a lot of backing over a short period of time, and that has brought the price on this particular runner down to quite a low level, certainly much lower than it was when the market opened. Now the video that you should view after watching this video actually talks about this particular phenomenon, why it occurs, the psychology behind why it occurs, and how that influences your particular decision within the market. So on this particular occasion, you see the prices come in fairly dramatically, fairly quickly, and the question you have to ask yourself is that going to continue, or is the price going to rebound and go back in the other direction? And the advice that I gave you on the previous video that I did about this specific type of setup was basically saying if the price has come in quickly and it's come in a long way, then it's probably not going to go much further. Why would that be the case? Well, there comes a point within the market that people aren't prepared to back it anymore. But also because the market is generally efficient overall, what happens is if the price on something has come in here, it's gone out there, and people start backing something at higher value. And if they back that, then the price on this one heads off in the opposite direction. And that's what I was expecting to see within this market. Now this setup was so familiar to me that I actually managed to tweet about it. I don't do this all the time. I'll do it now and again. If I'm having an intense trading session or I'm having a very boring one, I may not tweet. But sometimes this situation develops where I do have the capacity to be able to do that and alert you to an opportunity. You can't do it all of the time, but sometimes it just looks obvious to me, and so I will comment on it. But when I do these types of tweets, what I'm saying here is an opportunity. I'm not saying to you, this is an opportunity. Everybody has a different approach to trading, different tolerance to risk, at different levels of experience. And you'll know that when there's an opportunity, especially with trading, it's never black and white. It's a sort of, it's shades of grey, effectively. Some of them are much more obvious and others are less obvious. But fundamentally speaking, I was saying, here's an opportunity for you, have a look at it. You didn't have to do it, but I was strongly suggesting that it was something of interest. But basically what I was looking at here was, because we're at such a low point, I was expecting the price to head back in the other direction. And I've discussed the reasons why that should occur, but fundamentally we're looking at support and resistance lines. We're basically saying it won't go any lower because people aren't prepared to go any lower, and therefore you're expecting it to sort of bounce back in the other direction. There are a number of things that you can do to confirm this particular scenario, and by watching the market for a period of time, seeing how all of this develops. If we look at the chart that was a few minutes later, you can see basically that the price was going back out on a gentle drift. It was heading back in the other direction slowly. That confirmed to us that the backing support had dried up, and that whether it was other horses being backed or whether people had just stopped backing this or people were willing to lay it, this was confirming what we felt would happen within this particular market. But also, if you look at the ladder, and specifically around the point at which I entered the market, you can see there's quite a large accumulation of volume on the ladder at this particular point, and that's a reflection on people backing, but then people willing to take those back bets as lay bets. They're seeing value on the lay side, so they're just snapping up all of the money that's coming through the market, and that's creating an excess of volume at those particular points within the market. So that increased my confidence that this trade and this particular runner was heading back in the other direction. It was unlikely to go that much lower. So a combination of the chart and of the ladder gave us that opportunity within the market. And if we look at the final chart of this particular runner, you can see that it just did a gentle drift. It wasn't anything dramatic. I'd say this was a fairly normal sort of occurrence. Sometimes you do get abnormal situations that occur. We had one that occurred today I think it was the first race of the day, where the price sort of got stuck and then it rocketed off into the distance. But the reason that it did that was not only was the price low already, but the commentator mentioned that the horse was sweating up and looked nervous, and that gave it an extra kick. On this particular trade that we're talking about in this video, it was just a lack of support in the market that caused the price to drift. There was no fundamental underlying characteristic. So it was a nice trade. It wasn't a spectacular one, but I would say that this was a fairly normal occurrence within the market. So if we look at the final P&L, you can see that I ended up with just under £90 on this particular trade. You can see the amount of money that I used to do this trade. But always bear in mind that when you see me actively trade, I'm scaling into a position to try and get a good average entry point, and I'm scaling out to try and get a good average exit point within the market. So that amount that you see on the screen that looks quite large, when you actually open up the P&L and look at the individual trades, you can see that they're all relatively smaller amounts. Sometimes I'm going in and putting some more money into the market and then maybe pulling it out again quickly, or trying to add or remove stuff from my position. So that final total that you see is made up of all of that type of activity. There is actually, when you look at the open P&L on here, there is actually a slight mismatch in terms of the in and out trades, and that's because I messed up basically. I had the wrong settings on BetAngel where I was trying to do something else at the same time. But it doesn't matter really when you're trading. It's more about that net trade figure that you have, and then putting trades into a certain level that you feel comfortable with, and then gradually removing those trades out of the market, and then of course finally hedging before the race actually goes in play. But yeah, I thought this was a pretty good example of what a normal trade looks like. You have to wait for these opportunities. You won't see these all of the time. But when you have a range of different types of trades that you can do, you turn up to market, you make an assessment of what you can see, and then you think, right, okay, I recognize this. This is what I'm going to do in this market. That's exactly what I did with this trade. Fairly simple to understand. I hope I've described what I was looking for within this particular market, and how you can use that to your advantage too. Like I've said, there is a video on this where I actually talk about the fundamentals behind this type of trade. So if you want to explore this in more depth, then I suggest you go and watch that video, because that describes exactly what we're doing here very well, and also describes psychologically what's going on within the market. So I suggest you watch that too. Anyhow, I hope this video has been useful for you.